There is a specific kind of money loss that almost nobody talks about because it doesn't feel like loss. It feels like normal. It feels like the cost of having things. It happens in small amounts, across many accounts, on dates spread throughout the month, often at times when you're not paying attention to your bank balance. You're not making a bad decision. You made a decision once, maybe years ago, and that decision is still running, still charging, still taking money every single month while you've forgotten it exists. This is the subscription economy working exactly as designed. The people who built these billing systems understand something fundamental about human psychology. A one-time payment feels like a loss. A subscription payment becomes invisible. When you pay $50 once for something, you feel it. When you pay $5 every month for something you never use, you almost never feel it because it's small enough to pass below the threshold of attention and it's recurring enough to feel like a fixed cost rather than a choice. By the time you notice it on your statement, you've been paying it for 14 months and you're too tired to do anything about it. The first step to solving this problem is not canceling anything. It's seeing everything. Most people have a genuinely inaccurate picture of their recurring charges. They could name the big ones: streaming service, phone plan, maybe a gym membership. But the full picture, every charge that recurs on any cycle, monthly or annually or quarterly, is something almost nobody has looked at all at once. Until you have that picture clearly, you cannot make good decisions about what to keep and what to cut. You're managing something you can't fully see. The way to see it is to do a complete audit. Not a mental inventory, not a rough sense, a real documented list. You go through your bank statements and your credit card statements, every account you use for payments, and you pull out every recurring charge for the past 3 months. 3 months matters because some charges are monthly and some are quarterly, and catching both requires looking back far enough. You write them down or put them in a document with the name of the service, the amount, how often it charges, and when you last actually used it. Every single one. This process is uncomfortable for most people, not because it takes a long time, although it takes a couple of hours, but because of what it reveals. Most people find charges they had genuinely forgotten about, services they signed up for during a free trial and never canceled, apps that had a free version and then moved to paid and kept billing because they had the card details, subscriptions for things that made sense 2 years ago but haven't been opened since, software that came with a device purchase and then started charging after the trial period quietly expired, insurance products attached to credit cards that provide coverage you already have elsewhere. The list of possibilities is longer than most people would expect, and the actual findings tend to be worse than what people imagined they would find. Once you have the full list, the next step is to sort it into categories. The first category is things you use regularly and that bring clear value. These you keep without guilt and without reviewing further. The second category is things you use occasionally and might use more if you were paying attention to them. These stay provisionally but get flagged for review in a few months. The third category is things you haven't used in the past month and cannot immediately articulate why you need. These are candidates for cancellation. The fourth category is things you don't remember signing up for at all or don't recognize. These get investigated immediately because unknown charges can indicate something more serious than a forgotten subscription. The third category is where most of the money is sitting, and the conversation people have with themselves in that third category is revealing. You'll find yourself constructing reasons to keep things you never use. You might use it eventually. It's only a few dollars. Canceling is a hassle. I'll get around to actually using it. These are the stories that have been keeping those charges running, and they are almost never true. Things you haven't used in a month and have been paying for throughout that time are not things you're suddenly going to start using. The pattern is already established. The money is already gone and will keep going. Cancel everything in the third category. Not selectively, not the ones where the cancellation process feels easy, all of them. If you cancel something and find yourself genuinely missing it after 2 weeks, you can always resubscribe. The cost of canceling something you actually wanted is 1 month of absence. The cost of keeping everything you don't use is every single month indefinitely. The cancellation process itself is where a lot of money stays trapped. Companies spend significant resources making cancellation difficult. They require phone calls during business hours to cancel things you signed up for online in 30 seconds. They put the cancellation option behind multiple confirmation screens. They offer discounts and pauses and downgrades to make you reconsider. They have trained retention specialists whose entire job is to find a reason for you to stay. And a lot of people, faced with a difficult cancellation process, simply stop trying and go back to paying. The service has been designed so that friction wins. The counter to this is to treat the cancellation as a task that you will complete regardless of how long it takes, and to go into it knowing what to expect. If a service requires a phone call, block 30 minutes for it and make the call. If they offer a discount, decide in advance whether you would actually use the service at a lower price and have that answer ready, so you don't get talked into keeping something you still won't use for $8 a month instead of $12. If they ask why you're canceling, you don't owe them a detailed explanation. Canceling is a right, not a negotiation. There is a specific category of charges worth addressing separately because they tend to be the most invisible and sometimes the most significant. These are the fees embedded in financial products. Annual fees on credit cards you don't use actively enough to justify. Account maintenance fees on bank accounts that have minimums you're not meeting. Investment account fees that are charged as percentages rather than flat amounts, and therefore scale with your balance invisibly. Wire transfer fees, foreign transaction fees, overdraft fees that trigger from a poorly timed transaction. None of these feel like subscriptions, but they function identically. They recur, they're often forgotten, and they can be eliminated or reduced with a single conversation or a single account change. Credit card annual fees deserve specific attention. The cards that charge fees typically justify them with rewards and benefits. The question is whether you are actually capturing those rewards and benefits at a rate that exceeds the fee. Most people are not. The travel card with the $400 annual fee makes financial sense if you're using the lounge access and the travel credits and the points at full value. It makes no sense if you're paying the fee and using it like a regular card because you never got around to learning how to use the benefits. The math is worth doing. And if the math doesn't work, downgrading to a no-fee version of the same card or canceling entirely costs nothing and saves the fee every year going forward. Then there's the prevention side, because an audit is only useful if it changes the behavior that created the problem in the first place. The subscriptions you find this month will be replaced by new ones if nothing changes. The free trial you sign up for tomorrow will become a paid subscription in 30 days if you don't have a system for tracking and canceling. The system that works is simple. When you sign up for any free trial, you set a reminder for 2 days before the trial ends. Not on the day it ends, 2 days before, so that you have time to actually make a decision and execute the cancellation if needed. Some people go further and cancel immediately when they sign up, which works if the trial grants access regardless of the subscription status during the trial period. This requires reading the terms, but many services do allow this, and it eliminates the risk of forgetting entirely. For ongoing subscriptions that you're keeping, a quarterly review takes about 20 minutes and catches drift before it compounds. Services that started at one price and raised it. Things you were using 3 months ago and stopped. New charges that appeared and weren't noticed. The quarterly review is not an audit, it's a maintenance check, and the difference between doing it and not doing it over a few years is several hundred to several $1,000s depending on your spending patterns. There's also the shared subscription question. Many services now offer family or group plans at significantly reduced per person cost. If you're paying for 4 individual streaming service accounts across a household, you may be paying twice what a shared plan would cost. The same applies to software, cloud storage, music services, and various other categories. The consolidation conversation is worth having with whoever shares your finances. The total impact of a proper subscription audit is almost always larger than people expect. Not because any individual charge is enormous, but because the combination of forgotten services, underused memberships, embedded fees, and quietly inflating prices adds up to a number that would be meaningful if it were being spent intentionally. The difference between money that disappears and money that does what you chose for it to do is not always about earning more. Sometimes it's about closing the holes where the money that's already there is slowly leaking out. You probably have more of those holes than you think. The audit will show you exactly where they are. And unlike a lot of financial problems, this one has a solution that requires no income increase, no major lifestyle change, and no long-term commitment. It requires a few hours, a willingness to see what's actually there, and the follow-through to cancel things until the list is clean. After that, the only thing required is not letting it get messy again, which is simpler than it sounds. once you've seen what the mess cost you the first time. Something worth understanding about the subscription economy specifically is how the pricing psychology works, because understanding it makes you better at resisting it. Services are priced monthly by design even when annual options exist, because monthly pricing makes the cost feel smaller. $9 a month does not feel like $108 a year, even though that's exactly what it is. The monthly frame disconnects the charge from its annual reality. When you're evaluating whether to keep something, always convert the monthly price to annual. It changes the calculation. Things that feel trivially cheap per month often feel meaningful when you see the full year number sitting next to the question of whether you've used the service enough to justify it. Annual plans, paradoxically, can also trap people. When you pay for a year up front, the sunk cost effect kicks in. You've already paid, so you might as well use it. But then the year ends, and you renew without thinking because you've been on this service for a year and it feels established. Annual auto renewals are specifically structured to capture the people who would have canceled if they'd been reminded at the right moment. The reminder comes after the charge, not before it, which means if you're not watching, you've paid for another year of something you might have canceled for free a week earlier. Setting calendar reminders 2 weeks before every annual renewal date is tedious but effective. 2 weeks gives you time to actually evaluate whether you want to renew, to cancel if you don't, and to receive the retention offer that almost every service will make when you try to cancel, so you can decide with a clear head whether that offer changes anything. The service wants you to make this decision quickly and emotionally, ideally at the moment of renewal when stopping feels like losing something. 2 weeks of advance notice means you're making the decision deliberately from a neutral starting point, which consistently produces better outcomes. There's also the category of fees that are not subscriptions in the consumer sense, but function identically. Late payment fees on bills you forgot about, foreign transaction fees on travel purchases, overdraft fees that triggered from a poorly timed charge, ATM fees from using out-of-network machines. These are individually small and collectively significant. The easiest ones to eliminate are the ones that come from your banking structure rather than from your behavior. Switching to a bank or credit union with no ATM fees, setting up automatic minimum payments on all credit cards to avoid late fees even if you're going to pay in full, enabling balance alerts so that overdrafts don't happen silently. These are one-time changes with permanent ongoing savings. The credit card fee conversation is worth being precise about. There are 3 types of credit card annual fee situations. The first is a card where the rewards and benefits genuinely exceed the fee for your specific spending patterns. Keep it, use it properly, extract the value. The second is a card where you're paying the fee but not using the benefits that justify it. Downgrade or cancel. The third is a card you've had for years and never pay attention to. This is the one that requires the most honest assessment, because years of history and a long credit relationship can make people reluctant to close it even when the math doesn't work. The credit impact of closing an old card is real, but usually temporary and modest. The ongoing cost of an unjustified annual fee is permanent. If the card isn't earning its fee, the credit relationship is not worth the price of maintaining it. Streaming services deserve specific attention because they've multiplied so rapidly that the category has become a significant household expense for many people. The average household now subscribes to more streaming services than it actually watches regularly, because each service launched with a compelling exclusive and the cumulative cost crept up gradually enough that nobody registered the full amount until it was already substantial. The audit of streaming specifically should include not just which services you have, but which ones you've watched anything on in the past 30 days and which ones you're keeping for one specific show that may already be finished. Services that you're keeping for content you haven't gotten to yet are worth canceling and resubscribing to when you're actually ready to watch. The content will still be there. The monthly charge doesn't need to be. The household conversation is important here too. In households where multiple people make subscription decisions independently, the overlap and redundancy can be significant. 2 people subscribing to the same service in different accounts. Subscriptions that serve one person but are billed to a shared account without the other person knowing. Services one person wanted that the other person never uses but both are paying for. A single joint audit, done together, catches things that individual audits miss. The conversation can be uncomfortable if spending habits have been private, But the financial benefit of the transparency usually justifies the discomfort. Finally, there is the behavioral question of what to do after the audit to prevent the same situation from developing again. Because the audit solves the current problem but not the underlying pattern. The pattern is agreeing to recurring charges without a clear system for tracking and reviewing them. The solution is building that system before the next sign-up rather than waiting for the next audit. Some people use a simple document or spreadsheet where every subscription is logged with its cost and renewal date. Others use apps designed specifically for subscription tracking. Others rely on a dedicated credit card used only for subscriptions, which makes the statement easy to review because every charge on that card is a subscription. The specific method matters less than having one. A system that takes 2 minutes to update each time you sign up for something new will prevent the next audit from finding the same surprises the last one did. The money recovered from a thorough subscription audit and maintained through consistent review is not life-changing in a single month. But it's consistent, it requires no income increase, and it reflects a shift in orientation toward your finances that tends to produce other improvements. When you start paying attention to where your money is going at the level of recurring small charges, you tend to start paying attention more broadly. And that attention, applied consistently, changes what your money actually does for you over time. Start with the audit. Everything else follows from seeing what's actually there. The last dimension of this that people rarely consider is the compounding effect of recovered money. Every subscription you cancel doesn't just save you that amount once. It saves you that amount every month going forward indefinitely. A $20 monthly subscription you cancel today saves you $240 a year. Over 5 years, that's $1,200. That's $1,200 that can be invested, applied to debt, or saved for something specific. The math is straightforward, but the feeling of it is easy to miss because $20 a month doesn't feel like $1,200 over 5 years. It feels like $20, which is part of why the subscription economy works so well and why recovering your money from it requires deliberately changing the frame from the monthly amount to the annual and multi-year total. When you do the full audit and add up everything you're going to cut, convert that number to annual. If you're eliminating $150 a month in subscriptions you weren't using, that's $1,800 a year. Write that number down. Put it somewhere visible for a few days. Let it be a real number rather than an abstract one. $1,800 is a plane ticket and a hotel stay. It's a month of investment contributions. It's the deductible on an insurance policy. It's something real and specific that you now have access to because you spent 2 hours looking at your bank statements and making some phone calls. That's the exchange. 2 hours of attention and a handful of awkward cancellation conversations for $1,800 a year, every year going forward. There are very few things you can do with 2 hours that produce a comparable return. The work is small. The money is real. The only thing that keeps most people from doing it is not knowing that the money is sitting there, waiting to be recovered. Now you know. The rest is just deciding to look.